Hey guys, this is episode number, I believe, 37 now. I have done 3 of these in a row already to get these done. We've been talking a lot about finance because we are in the middle of a financial crisis, regardless of if people want to admit that or not. The Fed keeps saying, "Oh, everything's fine, and it's totally fine. Everything, the liquidity concerns in the market in our economy is so stable and blah 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 blah." Regardless, we are in a financial crisis and it's going to get worse. Before we get into what we're talking about today, which is the marker in Bitcoin, where we hit $28,000 for one Bitcoin, which is a big deal. I would love for you guys to go ahead and subscribe to the channel, and after this video is over, go watch some more of the videos. I just talked about the Fed meeting, which is happening tomorrow, the 21st and 22nd of March, and they'll be releasing either a Fed rate increase, a Fed rate cut, or pausing rate increases across the board. And I also was talking about, let's see, what was it, 2 videos ago, we were talking about Credit Suisse and UBS, Credit Suisse being bought by UBS in Europe. Credit Suisse is the second largest bank in Europe. So we talked about those things in some other videos. I would love for you guys to go follow my channel or subscribe to my channel and watch those after this one is done. Today we're specifically talking about cryptocurrency because that's my stuff. I'm really into crypto right now because banks suck, and because the bank managers and the economists who are controlling our money supply and controlling our economy are absolutely garbage. And I'm not gonna hover too much on that topic. I kind of tore into them in the last video because this could have all, not avoided, but this could have been much different than the way it is now. The situation that we have now in the banking industry is there's a ton of regional banks that are going to go out of business. There's a ton of worldwide banks that are going to go out of business, and we're going to continue to have inflation because pretty much every central bank in the world is now pumping fake money, which is just printed out of thin air, into the economy in order to make sure banks don't fail and make sure the depositors have money to withdraw so that people don't lose their entire life savings. Okay. Cryptocurrency, Bitcoin, is now at 28,000, and Bitcoin and cryptocurrency started pumping when all of this stuff started happening. And this was probably about 2 weeks ago, and Bitcoin started creeping up and had a huge day when the Silicon Valley Bank went out of business and crashed basically on a Thursday and Friday of 2 weeks ago. And that's because people don't trust banks anymore. And I know in my generation, I'm now 28 years old. So it's not too long ago that I was in high school and college and even middle school. We started to learn about the economy just a little bit, I wish they would have spent more time on that. But we learned a little bit about banks and how banks are supposed to protect your money, and it's the safest asset or the safest place to put your money. And they have really safe assets, and they make money over time at a very slow rate. And, oh, you can trust banks and all this kind of stuff. Well, guess what? They lied to you. And they lied to you really badly. These banks have no effing idea what they're doing, and they're gambling with your money. They are taking your money, your deposits, and they're putting it into the worst possible assets that you could possibly imagine. They're putting them into 2-year bonds and stuff like that were worth, at one point, that were going to make 3, 4, 5% in yield, that are now worth 80 cents, 75 cents on the dollar because interest rates have gone up. Okay? And so they're having to sell these bonds, and they're selling them at a huge loss. The bank is taking a huge loss in order to have enough capital in order to give people their money back in deposits, because there's been massive bank runs all over the world. And now people are taking their money and they're putting it into Bitcoin and cryptocurrencies. Now, I will say cryptocurrency and Bitcoin is a very interesting asset class because it's a roller coaster ride. And I will say that though I don't like banks, I really don't like banks now, I will tell you that cryptocurrency is even more volatile than the stock market and banks and bonds and all these other things. The reason that is because a lot of people have pointed this out. The value of Bitcoin and the value of cryptocurrencies is in the network and the processing power of the network and whatever that network is doing. Okay? There is infrastructure. Obviously, it's a worldwide web of computers that are put together, but it's not owned by Bitcoin, okay? So there's no capital assets that are necessarily backing up Bitcoin, that are backing up other cryptocurrencies in order to make them have value, right? Which absolutely makes sense. Peter Zahan, who's a geopolitical guy, has made this point on Joe Rogan and other podcasts about this. That being said, okay, Bitcoin has been around for, I think, 2011 or something like that is when it first got started. And they have had a continuous uptime of transactions for at least 10 years now, okay? Where they've had zero seconds of downtime, okay? That means something. That means a lot, okay? Because that means you can transact money from one place to another anywhere in the world at a very, 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 very low transaction fee. And it will be safe because it's on the blockchain and it's encrypted. And also, that provides value for customers all over the place, which is why Bitcoin has value. Okay? Now, the fluctuations in Bitcoin are not necessarily something that anyone control, and that's just a true statement. That being said, there are a lot of people who are seeing value in this network and value in Bitcoin because of this. Okay? The banks are no longer safe. We all know that now. We don't all know that, but a lot of us know that now after seeing the Credit Suisse deal, after seeing the Silicon Valley Bank deal, after seeing the Signature Bank deal, all of the and First Republic Bank now, Charles Schwab. I mean, everything is going to hell in the banking industry. And that's pretty obvious at this point. The banks have no idea what's going on. If you wanted to put your assets into something else like stocks, take a look at the stock market return over the past 2 or 3 years. I will tell you right now, it's not very good. We inflated the economy, which provided liquidity, which we put into the stock market. A lot of people would put into the stock market, so we had a nice little, top there for a while where the economy was chugging along. The stock market was going crazy. The Dow and the S&P were growing like crazy. And then people realized that the economy was too hot and started pulling their money out, which is why the stock market absolutely took a, basically last year. Cryptocurrency was the same way. People started pulling their liquidity out last year about, early spring, not early spring, yeah, probably April, sometime around then is when it really started hitting, and this also includes NFTs as well. Liquidity started drying up, the economy started slowing down, interest rates started to be hiked, and things started to go downhill. So stocks are no longer safe, and if you've seen some of the stock charts of the, just to name a few, AMC Theaters, Bed Bath & Beyond, Charles Schwab, any bank that's a regional bank or a community bank at this point. Most community banks are not on the stock market. But you know what I'm saying. Even big banks, JP Morgan Chase, things like that are taking an absolute pounding right now. And they were taking a pounding for a long time before this. And so cryptocurrency is becoming a more and more valuable asset because people are seeing the value in that transactional power of the network, which is awesome. That being said, liquidity concerns in the Bitcoin market and the market as a whole are becoming a serious concern because of the financial crisis that we're in, if not happening here over the next couple years. Regardless of the asset, people are going to start pulling their money out of whatever it is. Banks, the stock market, precious metals have done pretty well here recently, so a lot of people are going to precious metals because that's a great place to put money if you don't want it to be totally blown. And cryptocurrency and Bitcoin, which some people are calling the gold of cryptocurrencies, which may be true. It's a good store of value, but keep in mind, Bitcoin was 69,000 a coin like a year and a half ago, and now it's 28,000. We just hit 28,000. So the fact that I'm talking to you about a 28,000 Bitcoin versus a $69,000 Bitcoin says a lot about the volatility of the crypto market. Regardless, cryptocurrency is in a very interesting place right now. It's taking a lot of the liquidity from the stock market and from the banking industry and bonds and stuff like that, which is fantastic. But the concern is still going to be the liquidity in the market and what's going to happen as things start to tighten. If the Fed does continue to raise interest rates and the market and the economy continues to shrink, we will see a fall in Bitcoin. We will see a fall in altcoins specifically as well because they will start drying up. And I'm into a lot of altcoins right now. And so I've seen some of my portfolio take a dive over the past couple days. So that's unfortunate, but it is what it is. You buy at the bottom, you wait, and you hope that it goes up, right? So that's the situation with Bitcoin and the market in general. We'll see how it plays out. We're going to finish this one up really quickly, but before we go, once again, I'd like for you guys to subscribe to the channel. And also check out my social medias, which are David Coleman YT for Instagram, David Coleman 27 for Rumble, and Colma63ETH for Twitter, which I'm very active on when it comes to finance. So go check those out. I appreciate you guys, and we will see you on the next one.